Hi, Jerry. Welcome to the Power Talk show powered by Business Talks Weekly. Thank you so much for accepting our invitation and joining our channel today. Before we dive into a conversation, can you give a bit about your background and what inspired you to start Dorio?
Sure. Well, thank you, Navin. I really appreciate the time and welcome to all your audience. And I hope that I educate them a little bit about the world of venture and venture investing because it's an exciting area and I'm excited to get going. For just sort of historical speaking, I started my first company in 1999 and it was a online real estate company. It was 10 years before Zillow. And I was really successful. I had gone from zero to $1 million in revenue in the first 18 months, and I could not raise venture capital. And as a matter of fact, this was the this was the CD I sent out to everyone showing them how you can sell your house online in Indianapolis, Indiana. And I was really frustrated because venture capitalists were investing in me, but my customers wanted to invest. And I said to myself, one day I'm going to solve this problem. And fast forward to 2004, I was invited to teach venture capital and entrepreneurial finance at the Indiana University Kelley School of Business. I've been teaching for 21 years. And in 2018, I decided, well, I'm going to go back to that problem that I wanted to solve when I was an entrepreneur the first time around, because I don't want founders to have to run into a brick wall if they don't come from the right school, the right geography, or they don't have the requisite wealth, wealthy connections within a family. I'm all about democratizing entrepreneurship and unearthing founders all over the world, but they need capital. And what happens is, and the problem is, all the capital is constrained into a small amount of people. And we're talking billions of dollars in the hands of literally a few 100,000 people in the world. They get to decide who gets to succeed, and then everyone else is on their own. So Dorio is building an entirely new venture model from the ground up that is within the regulatory constraints of the United States government and will be within the regulatory constraints of the UAE, of Nigeria, of Singapore. And it's all based on this basic idea of allowing small investors to buy rights to invest in startups, not overpay for startups today. So you buy a little bit of an option today, you watch to see which companies are succeeding, and then you start betting heavy. And this model allows any founder to come to one of our venture staking arenas. It's called venture staking, where we can pair them with tens of thousands of small venture stakers who will say, you know what, I'll stake you, I'll give you a shot. And when you're winning, though, I get to keep investing. And that's essentially the model of Dorio and what inspired me to start it.
Understood. So, what I was going to and what I understood, can we call it like a or a pre capital revenue, a pre capital company who is not listed? It allows you to invest on a company which is not getting listed to buy the shares of that company.
Yes, it's a pre-public company.
How does it differentiate from traditional venture studios? How is your platform, and how is Dorio different from traditional venture capitalists? And what is the challenges that the traditional venture capitalists face that Dorio addresses?
Sure. Well, I would say venture capitalists, angel investors, even small investors all struggle to make money in venture because it requires such a large amount of capital to deploy into so many companies to find which ones are going to be really successful. Most VCs and angels are not getting access to that array of companies, and even if they are getting access to that large array of companies, they have to buy lots of equity early, right? And if you don't buy early and you don't get in, you won't be invited to the party later when they're succeeding. So you have to take a lot of upfront risk, and that's inherently the problem here. What venture staking does could solve for venture capitalists, angels, and small investors is it allows you to buy. It's like poker. Do you ever play poker, Navin?
I did online poker, but
Okay, but
yeah.
you have an anti-bet, right? You buy the rights to see cards. That's your
Yes.
expense. That is your expense. With a venture stake, that's the same thing. So you could buy an ante at the table for $10 that gives you a right to put $100 in later rounds. Or if you're a venture capitalist and you want to deploy even $100,000 into a company, you could buy a right for $10,000. But you see what happens here, you could buy a right a seat at the table for 10 companies for 100 versus putting 100,000 into 10 companies, which would be a million. So you bring down your costs of capital up front by 90%, and then you wait to see what the cards look like. And then you decide whether you really want to invest in that company or not.
So, who is your core audience? Are these early stage founders, investors? Can you just walk us through an example, how Dorio helped a startup or a founder thrive?
Right. So we are not the solution to everything out there in the world. We're going to operate as a parallel system to the traditional venture capital Silicon Valley model. Okay. We're not disrupting it. Okay. It may disturb it a little bit, but we're not going to disrupt it. We run parallel. Our target is getting founders started when the risk is highest. Typically, now, when that happens, founders have to go to family and friends and ask for money. Well, that is a very toxic thing to do because now you've got emotions and money mixing. You don't want to do that, right? So I've studied all the venture capital models out there, and the best model from what I have seen is what's called the Teal Fellowship out of San Francisco. An individual named Peter Thiel, he gives young people ages 18 to 22 who don't want to go to college $100,000 to figure something out. That model is more successful than any venture studio out there. It's just getting really smart people, a little bit of capital, a little bit of runway, and see what they can come up with. In our case, we want to scale that globally, right? So we want to
Yeah.
get founders at the earliest stages who are like, hey, I'm ready to become an entrepreneur. I want to come to a venture stake arena. I want to tell my story and I want to go raise a couple $100,000 and I want to go see what I can do. And then I'll come back to my community and say, hey, this is what I got. Now this is what I need. And the community's like, oh, yeah, let's go. And then other VCs can pile on and other angels can pile onto that. But now you've got this massive community of supporters. And that's the future of venture, right? It's not your technology or your product, it's your community behind you supporting you.
Yeah. So when you talk about community, can you explain to me how Dorio helps bridge the gap between knowledge, capital, and community building?
Well, the important thing about a venture staking arena and what we're doing that's different, this is a non-regulatory, as you pointed out, it's a pre-public company. This is actually a pre-private regulated company type of offering. The money that comes into a founder who raises a venture stake round, it's revenue. You're not selling a loan, you're not selling equity, it's revenue. Now, there's two pieces to this that we have to make sure is that the people that are venture staking, they are highly educated on how to do these transactions. So we have an investing simulation called Fantasy Startup. In order to be a venture staker, you have to get a venture staking license. To get a venture staking license, you have to play the Fantasy Startup simulation. You have to make 50 startup investments and you have to watch how all the failures are going to show up on your portfolio and you're going to see a few winners and you're going to see how those winners pay for all of your losses. It's very important that our community of venture stakers understands the game of venture. That's on one side. On the other side, founders who want to raise the venture staking round, they've got to pass an exam themselves. And this is called the Qualified Accredited Investor Exam. Okay. This is a 100-question exam that you have to be able to tell us that you understand valuation, safe notes, convertible notes, equity stacks, due diligence, revenue models, business plans, all of those things that you need to have in your arsenal if you're going to be a great founder. So you have to become prepared to know the game that you're getting into before you get to go to the venture staking arena and raise that money. And the venture stakers are counting on us to make sure that they're ready to go. And that's how we're going to have the safest, most secure, and most sophisticated private market of venture globally. And we want to put these arenas in the UAE. We want to put these arenas in Nigeria. We want to put the arenas across the United States.
So, Jerry, can you explain to me like two parts to this question? You are catering to investor as well as you are catering to a founder.
Mhm.
How does an investor get an exit? How does he make a money? Unless the company gets listed. If the company doesn't get listed, what happens? And what happens if a founder, due to unfortunate reasons, the business doesn't scale? Is Dorio reliable or applicable to any rebates or anything to the investors?
So I mean, these are incredibly smart questions. So let me answer these sort of, sequentially. The first one is exits, right? It's easy to put money into companies. You want to get your money out. The future of where venture is going is tokenization. But what's happening with tokenization, unlike Web 3.0 today and all the crypto that's happening today, this is going to be radical transparency associated with that token. right? The tokens that will continue to do well, and they are a reflection of a company. That reflection is going to be based on a company performing well and being radically transparent, so everyone knows what they're buying and selling. So what I envision are new stock markets where even Doriot could potentially at some point offer sort of ICOs within their communities and allow early investors to cash out as these companies are growing. When a company, so the power behind venture staking, and which I think it's the greatest asset, is that this first round of venture staking money is revenue, and it gives a founder some runway to figure things out. And to your point, not everyone's going to find anything. They may end up saying, sorry, you guys, I'm shutting down. And that's the risk. But that's also what makes this model so interesting, right? Because like that anti-bet, if you see your cards, you throw them away, right? And you move on to the next hand, right? So now if a company does start raising money and growing and scaling, there's still a chance for failure. There's no question about that. But I also believe in the future there's going to be insurance products around this where you could actually buy insurance that you could get your money paid back if that company fails. And we're in the beginning stages of thinking about what an insurance product would look like. But in the future, this is what it's going to be. Now, you'll give up some of your upside for that insurance, but you can protect your downside. And I believe products like insurance and new types of stock exchanges around tokenization is the future of venture, along with venture staking.
Wonderful, understood. So, Jerry, does Dorio will also provide a founder with strategy and business consulting or marketing consulting?
Yes. So the beginning funnel is we're going to bring investors and founders into a system. We're going to continue to allow investors to get weekly updates from the founders, what's going on, getting educated. With founders, we're going to have infrastructure in place that helps them build products quickly, helps them find product market fit, helps them deal with payroll, deal with accounting, deal with all the things that are not really value add in terms of finding customers and revenue growth. And so that would be a natural extension. And that's the expectation venture stakers will have of us is like, hey, we want to make sure that you guys are, providing rails for these founders that don't have a lot of experience, have a lot of ambition to make sure that they don't fall off the track.
Understood. So, for any business, especially any transactional business, there is a lot of compliance and security. And now, as you look forward to scaling, how does what is your vision, for Dorio, and how do you expand to different verticals with being compliant?
So first, we'll demonstrate our compliance with U.S. securities laws, which still globally the world looks at the U.S. securities laws as the safest place to conduct transactions. We're also going to expand into Singapore. They've got what's called a regulatory sandbox, and they'll allow us to operate this model for a period of years so they can see, if it's working or not working. And from there, we will then bring that model out and work within the frameworks of all the other countries. But it does come down to this: a venture stake is not a it's not a security; it's an education product. You're buying a membership. Like I could buy a membership in UNAV, and you're going on a journey to go start a company. You know what? I'll stake you for $100, and if you're succeeding, I get to put $1,000 in your next round, and so on and so forth. But I get to learn from you, and that's what I'm buying with my venture stake. Now, there may be an opportunity to conduct transactions in the US on behalf of transactions happening in Nigeria or anywhere else in the world. And we're looking at that potential as well, because again, the US system is trusted that there's an infrastructure in place to protect everyone in a legal system in Delaware that truly protects everyone. There's a scaling opportunity just by bringing these transactions around the world into the US system via a Delaware C corporation.
Understood. So, Jerry, everybody is talking about AI and large LLM models coming into place. How are you incorporating LLM or AI in Dorio?
So as a natural progression, we're going to start seeing patterns, and we're going to start seeing mechanisms that we can sort of determine who's ready to be a founder, kind of thing. We can also look at their history and track record. LLMs will scale some of that. The interesting thing about AI is that we have to think about what's going to be 15 years from now, not what's today. And so the entrepreneurs today have to be building for what's going to be 15 years from now. And our thesis is going to be, what does it mean to be human in a world of, you know, artificial general intelligence? What kinds of products and purpose are we going to be building and bringing to the world? And that's going to be hard for LLMs to decipher what the future might look like. So we want to keep that part open and not close people off on their ideas. We want we want humans to, wrap their arms around these ideas if they love them and let them grow. And we don't want AI telling us what we can and cannot start as an entrepreneur.
Understood. So, can you share with me a case study or a story, where a founder subscribed to Dorio and found investment and then scaled from 0 to 10 or maybe 10 to 100?
So this model is so new. It just was revealed on April 15th, but we are the case study. Now, Evan, you could buy a venture stake in Dorio right now. If you believe that we are going to bring this new type of a venture to the world, come to the Dorio site, Dorio.com, and buy a venture stake and watch us scale and grow this globally, and you get to invest. But we are laying the blueprint for everyone else to follow us, right? And we are talking about, we're having partnerships with companies. There's one partnership in India that we're talking about where they've got access to hundreds of thousands of young entrepreneurs that are really hungry to grow and build. But we want to make sure that they take the blueprint that we're doing because that's going to give them the best opportunity for success.
As you mentioned about scaling and growing, what has been your biggest challenge so far in scaling a business like Dorio?
Well, there's a couple of challenges. Obviously, always with a business that you're scaling is distribution. And for us, it's distribution of the message, right? At the highest level, everyone agrees we need more entrepreneurs. Everyone agrees we need to democratize venture. But when you take it down to the brass tacks, people don't understand how any of this works. So they just would rather sit on the sidelines. It's being able to help people cross over into what I call the frontier, where it's uncertain and unknown, but boy, is it exciting. And you get to play in this space and put a little money to work and watch and learn. And I believe that, over time, as people recognize that their jobs in middle America or middle, inside a corporation isn't sort of where it's at, that they want to become entrepreneurs. I think we're going to naturally see that. I think we're very close to a cascade where millions of people are going to embrace this. It's just, kind of pushing that boulder up the hill. And I think we're almost at the very top, but it's distribution of message.
Jerry, one final question, and I'll break this into two parts. What would be your advice to a founder who's looking for capital, and what would be your advice to an investor who's looking for investing?
Oh, great questions. If you're a founder looking for capital, don't wait for the capital. Start doing things because investors want to see you doing things. If you're not doing things and you're just waiting for the money, they're going to say, "Well, if I just give you the money, and it just means you're not going to be doing things, right? You'll just be able to collecting a paycheck, right? So you have to constantly be doing things and pushing the envelope, even if it's sending that extra email, even if it's just writing and starting a newsletter. You just have to start doing, you have to create activity, right? And then the investors come, right? That's the advice I would give to founders. Just start doing stuff, right? On the investor side, if you are going to be in this game of investing, you need to like run into your mind, okay, let's just say I'm a venture fund. We've got a $100 million fund. Let's deploy, let's deploy $1 million into 20 deals this year. Let's lock it in. Let's go find the 20 deals. Not sit and wait for the perfect deal and put 20 million into it. Go find 20 deals that are really credible. Put the 20 million to work in 20 different companies, and you're going to have a lot more fun and you're going to have more success because the power law and the convexity of returns demonstrates that you need to be diversified and you need to pile on your winners.
Wonderful, wonderful. Thank you so much for that advice, Jerry. And thank you so much for giving us time and joining our channel today. It has been a great conversation. Thank you so much.
Thank you, Navin.